Good morning. Morning, guys and gals and gals and guys and dudes and dudettes. How the heck we doing this morning? Good to see you guys. Hope everyone had a great weekend. Welcome to the education room. Good morning, JW. Um, let's do this. What do you guys say? I'm excited. I'm excited every day. I don't know. I wake up ready to work, so I don't know if that makes me weird or what, but I'm pretty stoked to be here. No news to speak of this morning, guys. But I mean, there was news, right? Everybody heard Trump cut the tariffs on China. Saw a big run up, kind of nice. And I want to remind you guys that just don't care if the market goes up or down. It doesn't matter if it's a bull or a bear. Doesn't matter if it's up or down. Doesn't matter. We trade patterns, guys, and because we're futures traders, we can make money both directions. It's not the price that excites me, it's the pattern, guys. It's the pattern, it's the volatility. So keep that in mind when you feel compelled to form opinions based on the news that you hear. We do check it every morning though, because we want to make sure that we're not trading um, excuse me, that we're not trading news that could affect um, our day. Something's wrong with my time zone here, guys. I like to keep mine Eastern time. That's where my computer is set. There we go, 9 a.m. Now it looks right. You're in the second perfect trade today. Just need to learn that annotation to show you. I like it, Todd. You annotated the other day, didn't you? Are you on Snagit or Capture? I feel like every time you're on Capture, right? So Todd, when you take a picture at the very top of Capture, this is important to me that you can share this. Let's see if we can find it real quick. Whoops. And I love that you're in the second perfect trade. The perfect trades are the trades, guys. Those are the ones. Let's see if I can find it in the video real quick. Um, boom, 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 boom. Screen capture pictures. I will accept the cookies. Um, dun, 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 dun. All right. So, have you watched this video, Todd? So well, now I've given you the instructions 10 times, silly. So you've got these different things. You've got color that changes the color of your arrows. You've got shape, you can draw boxes, and you've got call out. So call out, that button right there. You see how I click and drag and make this box? I can make it small, I can make it big, and then when I release my mouse, it gives me that cursor blinking in the middle. Can you see that? I don't know if you can see the cursor. This is exactly how you're going to do it on Capture. So you're going to click this call out button. And once you click that call out button, you're going to click and drag. And that's going to create your box. And then when you release the mouse, you're going to get that cursor. So click on call out button, click and drag to create a box. You'll see the cursor blinking. Start typing. And that's it. That's all there is to it. Give it a try. And what you can do is there's all these different things. So there's the arrow button. If you click on the arrow button, left click on your mouse and pull it down. And now you've got a big arrow. You can do the same thing with the shape box. I've got it up here. Click and drag. It'll make a shape. And then the call out box is the exact same thing on Snagit. Click and drag. Create a box. Give it a go. Let me know how it works out. And if you need help, man, we'll go through it again. But maybe, yeah, play with it. But you know that's your spot, right? So instead of looking for the perfect trade for 10 minutes, take 3 pictures and annotate 3 pictures. And then when it's time to annotate them for real, you'll be 100% spot on, ready to go. And then once again, I'm going to drop the instructions in the room. So you can watch that video if you want. It's only a minute long. But great stuff. Good stuff. I like it. I'm not worried, Todd. I don't worry about you. No, you can annotate after. So for example, I took this trade, and you can see how I annotated it. So I annotated with the entry, and then with snag it, I went all the way to the exit. But yeah, I'm writing everything after. Sometimes I'm writing it in the middle, but I'll take the pictures, and sometimes I'll annotate them. Sometimes I won't annotate them until after the trade is over. One of the things I do, I love that we're starting off this way, is I take a lot of pictures, Todd, and everyone else in the room. I take a lot of pictures. I take a pre-trade picture when I'm saying to myself, hey, my rules are almost met. Let me activate a limit order. Or maybe my rules are met. Let me activate a limit order. And guys, I just take the picture and I don't even bother annotating it. I just go right back to trading. I'll take pictures during the trade. Every time I move my stops, every time I take a profit, I'll take a picture. If there's time, I'll annotate it. If not, I'll go back to it and then I'll annotate it, because I use these pictures to help me with my management plan as I go through. After the trade, this is the one, Todd. You can take the picture from the entry to the exit. The trade is over. No big deal. Easy fix. So go to your entry chart and right click and go to data series. And then once you get data series up, scroll to the very, very bottom and make sure under plot executions, it says text and marker. And this will show you your entries and your exits. So right click on your chart. I'm giving you the picture too. I'm making pictures for everything here. So you're going to just right click and go to data series right up here at the top. And then once you have data series, scroll to the very bottom, text and marker. Hey, good morning, Tucky. Good to see you here. And then text and marker, what it'll do, once that's activated, is it'll show you where you entered with a little pink arrow. It'll show you where you exited with a little blue arrow if you go short. If you're going long, it'll show you where you entered with a little blue arrow. It'll show you where you exited with a little pink arrow. And it'll show you entry, close, target, stop, whatever gets hit. And that way, when you come back and you're looking at it, you're like, man, I got in at the area inside of triggers, but in reality, you got in all the way down here at divergence, at a fib. You'll be able to see that, and I'll be able to see that. And then I can say, all right, I see what you were doing. I like the direction your head was going, but let's talk about getting in at the best spot and not the later reaction. And we slow those, we speed those reactions up a lot just through repetition. Being able to see a trade in the beginning happens a little slower than it does a month in. And then 3 months in, you're like, oh my gosh, I'm calling my shots. I'm predicting the market. Not show data box. Right click, go to data series, scroll all the way to the bottom, plot executions. Plot executions. It's next to last. And then make sure, so there's a drop-down menu. It says, do not plot, markers only, text them. I love an aha moment. And Todd, this is what the classroom's for. So everyone else that's listening, this is why we have this classroom. It's not just to teach you how to read your indicators. It's to teach you the best study habits. It's to teach you to work your way through NinjaTrader. It's to give you a plan that you can follow. I like text and marker, Todd, because it helps me do math personally. When it shows me entry and then it tells me where my entry was. So every picture I take, when you look at entries and exits, you'll see my entry. So here's a trade, for example. I can see exactly where I entered. I can see exactly where I took profits, and I can see where I got stopped out break even. I can see exactly where I entered. I can see exactly where I took profits, and I can see exactly where I was stopped out of that trade. So what it does for me is it lets me see after the fact exactly what happened and exactly where it happened. Thank you for asking those questions. And guys, if you're struggling with anything, don't be shy. This is what I'm here for. So I check news every morning. Let's go back to that. I love it. And guys, I'm not looking. So for example, tomorrow on the 13th, core CPI I couldn't care less what they say. It doesn't matter to me. But what I do know is every time I see a red box on this news release, it could disrupt my patterns. It could make things go sideways. It could make it too fast to trade. So I choose to not trade. If you're using Nexgen's funding company, it'll be too fast. You won't be allowed to trade red news. Jerry S. TradingView has videos for TraderView. TradingView has a whole database of how to use their software. TradingView has 1,000 videos on YouTube on how to use their software. When I do it, I'm going to talk a lot about entries and exits, and I'll go through some basic stuff as we go through the classroom. But I don't think we're going to build any videos for TradingView. TradingView, they have like 60 million users. TradingView education videos. And if you just click on videos, it'll go on for eternity on TradingView videos. If you go to YouTube and search TradingView educational videos, I mean, you're gonna see a bajillion things. TradingView tutorial, and this is a whole series. So there's part one. So let me drop that in there for you. What you're gonna find is that TradingView isn't that difficult to use. It's just new, so you've got to work through things a little bit. But there's part one of their tutorial. And then when I'm teaching in the afternoons, I will be talking about entries and exits and stuff like that. Hey, Joel, good to see you. And we've been doing TradingView towards the end of class every day. Jerry, you're always welcome to be here to ask questions, to jump in. Nothing's off limits. If I know the answers, I'll give the answers. There will be times when I don't, and I may say, hey, you might want to Google that. You may want to go to the TradingView resource. I love TradingView. I'm not going to lie. I am such a fan of TradingView right now. We've been hitting it in the last hour lately, Jerry. And then if it runs over, it runs over. And then probably next week when the funding company is officially going, I'm going to run 2 classes. I'm going to run a NinjaTrader class in the morning that lasts a couple hours. And then in the afternoons, I'll probably give myself an hour for lunch. And then in the afternoons, we're going to do one that's dedicated to watching TradingView. So I'm going to bring my TradingView over, and we'll just go through, hey, good morning, Sid. And we'll go through what we're looking at and different markets and what the indicators are saying. John Novak will probably spend some time in the room as well. And we'll be looking at, okay, here's what we see. This is what the rules say. All that good stuff. So I'm going to have at least 4 up. And then I've got XRP for my wife. And we are loving the bounce. We got in at 40 cents. It's at 260. That's always a good thing. So guys, there is no sign up. I know what you mean, Joel. Just show up, ask questions. We're going to keep the first part of the morning pretty NinjaTrader centric. But what you're going to find, guys, is that the two really aren't that different. NinjaTrader stuff is going to use Renko. TradingView is going to use minutes, minute bars. And guys, minute bars are what Nexgen started on. That's what we started teaching on. I like them because they're slower. I like them because for me, they force a little more patience. And that's what I need in my life. But let's get into what we're going to do today, guys. We're going to go to the education page. And everything that I'm talking about is going to come from here. I revamped my whole PowerPoint today. I rebuilt the everything you need. I'm just freaking excited this week. So brace yourselves. I'm going to be chatty. We're going to talk about, for the first 45 minutes or so, guys, a high probability trade. And this page on the website is everything that I do during the day, everything that I talk about during the day, everything you need to find what I'm talking about. And I'm going to give you this same page in a Word document, but we're going to focus and keep it simple. We're gonna look at one trade, guys. One trade that's been proven to win more than it loses. One trade that creates an advantage, an edge, when you follow the rules for it. And that's your high probability trade. And the most important thing, not that I know of, Gary. Not that I know of. I don't deal with the affiliate stuff. You can ask it over in Traders Chat, but I don't know for TradingView. I don't know that they do an affiliate thing. There will be affiliate links for the funding company, though. So as you guys get your friends in, you might as well make some money with it. This high probability trend trade, guys, it's designed to teach you one thing, to read your charts, because most of your day is spent, good morning, Lonnie. Most of your day is spent chart reading, guys. Most of your day is spent waiting for that pattern to present itself, to have that edge that says, hey, it's time to get into the market. When you understand the high probability trend trade pattern, guys, when you understand the rules, and there's only 3 rules. Once you commit these looks to memory, this pattern to memory, you're going to understand where the market is likely to go, and this is going to be awesome for targets. You will understand where the market is likely to stop. We call those termination conditions, guys. They can absolutely end a trend, and you're going to understand where the market is likely to continue, and you're going to use that for an entry area. And I focus on this highest probability trend trade each and every morning because it's going to teach you to recognize and understand the advantages that are being given by your indicators. It's only 3 rules to make it happen. Each rule, when true, produces an advantage, guys. And the recipe for a trade is momentum through rule number 1, added to a clear path through rule number 2, and then entry is defined through rule number 3. This is a trade that typically wins 70 to 80% of the time. And there's an enormous amount of confidence that comes from that level of success. These 3 rules are going to happen on only 2 charts, guys. There is a large chart. It's a slow moving chart. It's a very broad stroke of a brush. And it takes this one bar to define direction, momentum, and areas. Rules 1 and 2 must be met on the large chart. When they're met, you're going to go to the small chart, the entry chart. And inside of this one bar is all of this movement, guys. And it's this refinement process that's going to have you pinpointing your entries. It's this refinement process that's going to have you creating less risk, higher profit potential. So it's only 2 charts to find 3 rules. And we're using these 2 charts because they're a reflection of who you're trading with or against. The large chart is the big crowd. These are the men and women that have the ability to wake up and create a trend. These are the men and women who create the momentum that we use for our first advantage. These are the men and women that react at key areas that take away our advantage provided through rule number 2. Large crowd typically wins, guys. Large chart leads the way. Your small chart is nothing more than that small crowd fighting, creating that pushback that you'll never see in the big crowd's movement, but that small chart will show it to you guys. And their fight, that small crowd fight, rule number 3 is designed to pinpoint where they typically lose their fight. And they typically lose 70 to 80% of the time, which means that if you are following the rules for the highest probability trend trade we teach, If you are embracing the idea that when you trade with the trend, the momentum, the direction, the path established by the large crowd, pinpointing your entry where the market is most likely to continue, where the small crowd is most likely to fail, creates an opportunity for you to win, to have the potential to win up to 70 to 80% of the time. We are going to learn how to recognize that entry. We're going to spend the whole morning focused on an entry. That's it, guys. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I want you to really embrace the idea. It's okay to trade when my rules are met. When I have three advantages, momentum, path, and entry, it's okay for me to enter the market. If I look at my charts and I have to say to myself, I don't have momentum, my path isn't clear, I can't define an entry, as a brand new user, I want you to be okay with the idea that you don't have to be in the market. Nobody can make you enter the market. Nobody's going to hold a gun to your head and say, go with your gut and take that trade anyway. And 90% of your day is going to be spent waiting for those advantages to come together. Everyone in this room has the ability to simulate, to practice, to get in there with absolutely no risk. Guys, the simulator is your safety net. You can fall from the top floor of the building and just bounce. You can go to the batting cages and never strike out. You can go to the driving range and never get a triple bogey, guys. That's what simulator is. It is a risk-free environment to develop muscle memory, to get your skill set in place so that you can one day take that show live. The path to becoming a confident trader, ASAP, guys. The quickest way to get there, post in the room. Just take a trade, drop it in the room. If you see something, drop it in the room. If you have a question, drop it in the room. The more you participate, in this classroom, the more questions you ask, the more pictures you show, the quicker you're going to get to where you want to be, guys. That's been a staple and a gospel truth since Nexgen began live education in 1999. The goal is that when you post your pictures in the class, guys, I want to know what you saw. I want you to tell me why. I want you to say, hey, Mark, here's my momentum. Rule number 1. It was either met or it wasn't. But write the rule. I need strong triggers. And then here's my path. Rule number 2. And then here's where I entered. Rule number 3. If you take the time to tell me what you see, I can take the time to tell you whether or not your chart read was accurate, whether you're reading your indicators efficiently and effectively. I can look at your entries and we can analyze it and see if there was a way to get in with less risk, higher profit potential, guys. If you post in my room and you omit the annotations, you're doing yourself a disservice because you're going to use those annotations. You're going to go back and study these charts, guys. And that's the second part in becoming a confident trader ASAP. I'm going to hand you a spreadsheet. Before this hour's over, I'm going to give you a plan as well. And all you're doing is you're learning the looks, guys. The looks you're going to commit to. You're learning these patterns so that they become easy. So you're going to use the spreadsheet, and there's 4 tabs. The first tab is what it means to have your rules met in green and what it means to not have them met in red, so that you can adhere to the idea that the only time I'll ever enter the market is if I have those advantages. There is a client trade section that gives you about 500 pictures of Nexgen users taking entries, taking exits, embracing advantages, and well-annotated charts for you to study. There's also ideas on management. There's a tab where you can put your pictures to build your trading plan. When you're following rules, when you have an edge, when those advantages are in place and your patterns are true, make sure that you're putting those pictures in here because you're going to come back and study these and commit those to memory. And then finally, the trade tracking sheet, guys. This is where every time you take a picture and you put it in the room. Sid, I hope it's a good one, man. You're going to get feedback. And I don't want to join the conversation. And Sid is saying, check it out. The bottom held, the triggers rolled up, everything was up. And Sid, this is unreadable, man. There's arrows everywhere that make no sense. But over here, I can line it up. And Sid says, Mark, I want you to see this. Every indicator was up. I had momentum. There was nothing in the way. So I found a way to take an entry and then exit at Fibonacci resistance. And all I did, Mark, was embrace the idea that when momentum is in play and then when the path is clear, I'm going to find a way to make money. I'm going to find a way to get paid. And that would be a picture that he would put into his sheet. And the feedback from class would be, with momentum and path, Sid, it's almost hard not to make money. With momentum and path, you'll find an entry. Your entry was just jumping in, and you exited before a loss of momentum. Whatever the feedback was, he's going to put it in there. And then he's going to come back tomorrow morning. And Sid's going to say, all right, what did I do yesterday that worked? And the answer is going to be, I embraced momentum and path. I traded with momentum. I didn't trade into areas. And I'll be darned, it was effortless to find a way to make profits. And then he's going to say, what didn't work? And maybe today Sid takes a momentum trade, but he's lacking momentum. Maybe Sid takes a momentum trade directly into a termination condition. And he's going to see that in the feedback. Don't trade into termination conditions. And when you do this, what happens is you wake up the next morning, you look at yesterday's trades, you're analyzing the things that are bringing you success, you're analyzing the things that are taking that success from you. And guys, you are starting the day with a clear picture of what you need to be successful, and this will accelerate the learning. Do not skip out on the spreadsheet, guys. It's huge. And post in the room. Post your questions. We had a great conversation about chart annotation this morning. And what did it take? 5 minutes, Todd? And now we got you where you need to be, right? All you have to do is ask. The only way I don't know if you need help is if you refuse to ask for help. So without further ado, let's learn 3 rules. That's a pretty undaunting task, isn't it? Let's define strong triggers so that we can have the advantage of momentum, guys. And strong triggers is pretty simple. Strong triggers is a separation, and that's all it is. So there's 2 trigger lines that you're going to be working with. There are small triggers and there are large triggers, and these are on both time frames. And when your small triggers are up and above the large triggers, when your large triggers are widening, that space in between the 2, guys, that lets me know that I have strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. Good morning, Luciano. Good to see you. And then go in the other direction. When my small triggers are below the large triggers, when the space is created between the 2, this strong trigger, look, this separation between the small and large lets me know that the odds are favorable for the market to go down. So in order to have strong triggers, you must be trading with the trend, and the trend is defined through the background color. So in an uptrend with a green background, smalls above the large, space between. In a downtrend, smalls below the large, space between. It looks like scissors that are open. Guys, when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. You're going to see it annotated on charts a lot. OFM. People are going to say, I had OFM, Mark. OFM pushes a market. OFM is what I look for to break key Fibonacci areas. Odds favorable momentum. It's even going to cover some of the mistakes that I might make as a new user. Strong triggers lead the way, but strong triggers don't last forever. This is what it looks like to have your advantage. And then when the smalls work their way inside of the large, that's what it looks like for your advantage to go away. And when smalls work their way back inside of those large triggers, when the separation is no longer present, guys, this is a weak trigger look. It's the opposite of strong. Anything can happen up or down. The odds are no longer favorable to continue in the direction of the trend. So brand new users, what you can do is you can commit to that separation. You can say the only way I'm ever going to look for a trade is if the smalls and large are, that's it, ready to cut you a check. I like that, Jerry. When the scissors are open, they're ready to cut you a check. Man, I'm stealing that. So does everybody see it? Right here, the colors begin to match. The space is there. The market pushes down. That 1 bar, guys, that's your potential entry. That's a tail. On a large 1 bar, you're using that refinement chart to pinpoint where a potential entry was. There's your advantage. And you can see where your advantage is no longer present. There's your advantage where it's no longer present. So guys, what I want you to do is commit to the idea that strength is the best of the best. The market's likely to continue. And then the opposite of strength is weakness. And when the small triggers work their way back inside of the large triggers, that's weakness. Rule number 2 is not met. Anything can happen. And guys, I don't think it's a coincidence that 1, 2, 3, 4 out of 5 pivots had weak triggers where the market turned. Your advantage is no longer present. Would you guys be so good as to give me a why? If you're comfortable with the idea that when triggers are separated, the momentum is strong, and when they are no longer separated, it's all right to do nothing. That advantage is no longer in play. Wonderful. Guys, once I have strong triggers, that's only 1/3 of my advantages. I have to make sure I'm not trading into a termination. I have to make sure that I have room to my profit targets, that I have what we're going to call a clear path. And I'm only going to rule number 2 when rule number 1 is met. So a termination condition is an area that could reverse the market on that large chart, that slow chart, that very broad stroke of a brush. Areas on the large chart are where the large crowd are making decisions. And I know that's only a metaphor, guys, but it's a great metaphor. This is where the sellers are selling and the buyers are buying. This is where the men and women who could ruin your day are most likely to reverse the market, to create bounces, to fight one another. And you don't ever have to be a part of their decision-making process, guys. Areas that can stop the market are magenta high divergence lines, cyan divergence lines, the lows, red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. And all of these areas, if you just think of them, this is where the large crowd is going to make a decision most likely. It makes the recipe easy. The recipe for defining a termination condition begins with price reaching the area. So here it's resistance, here it's support, and once price reaches an area, and there it is again at resistance, all you have to do is ask yourself where the trigger lines are. Price gets there, the decision-making process is set off, and we don't care about price anymore. Don't give 2 flips about those price bars. We're going to let the trigger lines tell the story. So if price reaches resistance, the triggers remain below. Price reaches support, the triggers remain above. Price reaches resistance, the triggers remain below. Do you see the pattern there? It's a termination condition. It's an area that could stop the market, that could create an untradeable bounce. It's an area that could ruin your good time. So absolutely no trades into the area. That's how you define a termination condition. That's exactly what it looks like historically. That's what it's going to look like in the moment, guys. Price reaches that area and the triggers remain below, and you're just going to have to sit on your hands and wait for the reaction. Areas break. So a clear path means that price has not reached an area. We haven't made it to a decision-making process, and both the small and large triggers have cleared the previous area. So all of the triggers are above resistance and we haven't reached the next level. All the triggers are below resistance and we haven't yet reached support. Guys, this is the clear path. And it can be from a breakout when the small and large break above the area of resistance. This is the market breaking out. We'll look for opportunity. It could also come from a reversal. Once the triggers roll, give you that momentum, guys, down we go. So it can be a termination condition or it can be a clear path. Instead of trading into areas, you're going to trade from areas. And the easiest trades you will ever take, I had to add this one in there, guys. Does everybody see rule 1 is met, strong trigger lines? And then when we go to rule number 2, price has not reached support and it has reversed from resistance. I've got no terminations. My path is clear. My triggers are strong. There's one of those tails, guys. And on the refinement chart, that's a potential entry. This is the best of the best. Trading away from fibs and then using fibs as a target. And guys, that's really it for termination conditions. It's either going to stop the market or it's going to break. You'll never know what the reaction's going to be. It's okay to sit on your hands and do nothing. 3 divergences in the same price range. This is the final termination condition I'm going to talk about. You'll see this on a large chart. It takes a while for it to produce. When you see it on a small chart, it's the small chart giving you kind of a heads up. Hey, change is coming. The large chart says down, there's a lot of strength. And then your small chart prints 3 divergences from a low. Three cyan lines letting you know that momentum was lost 3 times. This can stop a trend. This can create an untradeable bounce. Guys, this could mess up your good time. And that's the only time on a small chart I'll let it talk me out of a high probability trend trade if the advantage of momentum and I have a clear path. So guys, that's rules 1 and 2. It's not difficult. It's a little bit of language, a little bit of recognition, and the large chart leads the way, guys. The large chart is your core. It's the foundation. Once you understand how to identify momentum, and then once you can pair it with a clear path, you're going to be absolutely floored at how effortless it becomes to find a way to capitalize on the market. Your initial way to capitalize is by defining an entry on a smaller, faster chart. And rule number 3 says you're going to use a limit order to buy or sell a pullback at an area inside of triggers. And that's the recipe for pinpointing the best of the best spot to enter the market. That's the recipe for pointing out exactly where the market is most likely to bounce and continue. That's the recipe for reducing risk, for increasing profitability. So when the rules are met on the large chart, when rule number 1, strong triggers, is in play, when rule number 2, no termination conditions are present, guys, it's that one bar. And you won't even see the tail yet. It'll just be strong triggers with nothing in the way. This picture is showing that refinement process. And guys, the recipe for defining an entry is first, on the small chart, when the large chart rules are met, is wait for a reversal bar. Wait for the small crowd to fight. And then on a small chart, large and synthetic triggers, these are your large, smooth. Compare them to the smalls to let you know there's momentum. These are your synthetic. Your synthetic large triggers are just the large chart large triggers. This is defining where that retracement is most likely to go, where that pullback is most likely to go. Somewhere from the bottom of the triggers to the top of the triggers. I don't know where, but I know that it could go from here to here. And then the areas in the retracement zone pull back to an area inside of triggers. This defines where the market is most likely to bounce and continue with the trend, guys. And it's these areas inside of triggers. These will define your entries. It takes one bar on the large chart to know rules 1 and 2 are met. Inside of the one bar, you'll see a reversal, a bounce, and you're going to see the pullback and the bounce if this is a successful trend trade. So we're using the refinement process, guys, and all you need to do is remember the order of operations. When the rules are met on the large chart, you wait for a reversal bar on your small chart. The reversal bar is not your entry. Once you get the reversal bar, you can define where those bars are most likely to push up by using the large and the synthetic triggers. The tighter these triggers are, one on top of each other, the smaller that retracement zone is, the larger the accuracy becomes. And then you're going to define your entry using an area, a fib, a mid band, a yellow 1-to-1, but it has to be inside of those triggers. It has to be in that retracement zone. And then you're going to activate a limit order 2 ticks below it. Because of the large chart advantages, because of the momentum, because of that clear path, we're not expecting it to get too far past all this. So we're going to get in at the lowest area inside of triggers. And what you're doing is you're defining where the market is most likely to continue, where it's most likely to retrace, where it's most likely to bounce. It's a pretty outstanding level of accuracy. And you're also, by using the understanding of retracement zone and areas most likely to create a bounce, you're going to realize that any of these lines beyond those trigger lines, any lines on the wrong side of triggers in a short trade, beyond the retracement zone, beyond the areas most likely to create a bounce, These aren't a part of your entry window. These aren't a part of the equation, guys. This is where rule number 3 is no longer giving you an advantage. Rule number 3 has gone out the window once you get past those large and synthetic triggers. In an uptrend, the market is trending up. The momentum is strong. The path is clear. The pattern says wait for the reversal bar. It begins the pullback, that fight from the small crowd. The reversal bar is not your entry. Your next step is to define where the retracement is most likely to go. And that is somewhere from the top of the triggers to the bottom of the triggers down here, large and synthetic. And somewhere in this range is where those bars are most likely to push down. And that range becomes even smaller when you create that window from the highest point of support to the lowest point of support, because somewhere in this area is where the market is most likely to bounce. Somewhere in that area is where the small crowd is most likely to fail. You're going to activate a limit order a couple ticks above that highest point of support and say, come and get me, small crowd. I can't wait to be in this trade with all these advantages. And any lines on the wrong side of the triggers, below those triggers, beyond the retracement zone, beyond the areas most likely to create a bounce, guys, this is where rule number 3 is no longer helping you. This is where your advantage is gone. This is where we don't want the market to go. And in fact, you're going to use areas beyond the triggers, or you're going to use the 4 to 5 ticks beyond the triggers as your initial stop placement. And you're going to say to yourself, this is where the market should not go. If this is going to be part of that 70 to 80% win percentage, the market shouldn't be able to make it past the retracement zone. The market shouldn't be able to blow through those areas inside of triggers. And guys, if they can make it 4 or 5 ticks beyond all that good stuff, you're going to exit the trade. This is your initial stop. And yes, it means that you took a loser. And anything that wins 70 to 80% of the time, guys, it is obligated to lose 20 to 30% of the time. Losses, whoops, are not a failure. Losses are not a reason to get upset, guys. Oops, Todd, you posted not the link, but rather just the description of the picture. So either copy paste from the open picture or hit the upload button, and then that will put that screencast link. Oh yeah, you can't go back and forth between computers, unfortunately. We've had that challenge before. 20 to 30% of the time, you will lose the highest probability trend trade. You don't get to pick when you lose. You don't get to pick when you win. The reality of it is you'll never know if you're going to win or lose. You're never going to know if it's going to be a victory or a defeat. And guys, because this is a pattern that typically wins 70 to 80% of the time, you're going to be okay with that occasional loser. You're going to understand that it's a normal part of a positive equity curve, that it's just a cost of doing business, because we're not trading our desires to win, and we're not trading our hopes not to lose. We're simply trading a pattern that you can go back, that you can study, that you can prove wins more than it loses. And guys, that's the high probability trend trade. And this is the whole pattern. When the large chart defines the trend through the background color, you're going to make sure that you have strong triggers. And if you have strong triggers, it's just like a flow chart. Then you will check the path and make sure that you have a clear path. And if you have a clear path, you're going to wait for the reversal bar. And I'm going to show you some pretty common stuff. Let me make this not so ugly. You're looking for a reversal bar when the market is trading all the way up here, guys. That's where the reversal starts. And you're going to say to yourself, man, I've got $80 worth of profit potential to get to that termination condition. And the reality is, guys, this isn't a termination condition until price reaches it. That becomes a target. But that $80 grows when you wait for the pullback to the area inside of triggers. Your risk goes down dramatically when you buy low. And that $80 worth of profit potential turns into $300 worth of profit potential. To get to that area, that could be trouble. So what you're going to do is you're going to go back and study this pattern, guys. And I'm telling you right now, the greatest traders aren't made from taking trades and hoping you get it right. Every time you have momentum and path, this is crude oil this morning. Circle a tail. Can you give me a Y if you see? Odds favorable, momentum, separation. Scissors open to cut that check. Thank you, Jerry. Small and large are above resistance and they haven't reached an area. Can you give me a Y if you see that that's rules met on a large chart? What does it look like on a small chart? Oh, our areas were on the wrong side of the triggers, guys, and they never made it through the retracement zone. That's kind of a bummer, but this is one of those scenarios where you might say, dang it, that's just not my money. Rule number 3 wasn't met. So you'll scroll back again. And you'll see that tail with all that momentum. And this is what we call a 50-50 look. And we didn't talk about this in the PowerPoint. When your small triggers absolutely smash through an area, but your large triggers haven't cleared, as long as those scissors are open, as long as you have momentum, that area has the potential to break. And because of that potential, you can take a medium probability trend trade. And do you see how the bottom of that tail pulled right back to support, right in the retracement zone? It never made it to the wrong side of the triggers, and it was a pretty easy winner with all that momentum. There's your pattern, guys. Go back, and you don't even have to enter the market. There's the one I did all today's pictures with. Odds favorable, whoops, potential to break, and it pulls right back to resistance inside the zone. Guys, this is your high probability trend trade. In order to catch this trade, you have to be able to recognize momentum. In order to have the highest opportunity of success, you have to understand termination conditions. Guys, this is your core. This is your foundation. So I'm going to give you Chart Reading 101, and this is designed to get you focused on that large chart, to get you focused on those first rules being met, guys. And when I have strong triggers, this is my commitment to take a trade. And when I have weak triggers, I choose not to enter the market with that weakness. And what you're going to do is you're going to go take 25 pictures each, guys. Strong triggers, weak triggers, clear path, termination. You're going to take pictures of what it means to have your rules met. You're going to take pictures of what it means to sit on your hands and not do anything. And you're not just going to take the pictures. You're going to go back and you're going to annotate them. And you're going to say to yourself, on the chart, smalls below the large, colors match, strong triggers, strong triggers, strong triggers, strong triggers. And you're going to commit this look to memory. And what you're doing every time you annotate the chart, guys, every time you annotate that chart, what you're doing is you're creating this correlation between what your eyes see and what it means to you, what your brain hears. And when I see strong triggers, my brain hears odds favorable. My brain hears likely to continue. My brain hears rules 1 met. So post them in your spreadsheet. Study them a little bit in the morning. Set yourself up for success. And then as you take those pictures, I'm going to give you the high probability trend trade. This is your cheat sheet. Because new users, they're like, how can Mark tell me to take pictures of strong triggers? I've been here for a day. I'm going to give you the cheat sheet, guys. This is a high probability trend trade checklist. This is the highest probability way you could ever take a trend trade. This is the best of the best, guys. This is the golden goose. Is the market coming from a strong top or bottom? And that means that the market had a termination condition, and that termination condition reversed the market, guys. A strong top or bottom starts with a termination condition. Price reaches the area, and only when the triggers roll does it become a strong top. Price reaches the area, triggers stay above. First it's a termination, then it rolls, and that's your strong bottom. This is the precursor to the highest probability trend trade you could ever take, and rule number 1 for most every other trade that we teach. Do you have momentum? This says both charts because that's the best way. And you either have separation or you don't. You either have the rule met or you don't. Let it be that black and white. Do you have a termination condition? Price reaches the area, triggers are above, sit on your hands and wait for the reaction. Did the small and large get below the area, giving you a clear path? That's your look to get in. Or was it only the potential to break? And guys, you're going to find trend trades with potential. This is the second trade on your plan. But you have to know it's only the potential so you can manage it a little assertively. And then defining your entry all the way down to where your limit order goes. And then the second page, print this out, put it on your desktop, hold yourself accountable. And even more importantly, new users, I want you listening. I want you writing this down. I want you to write these rules on your chart. Every trade you take, I want you to write strong triggers, and I want you to put a Y or an N, a yes or a no. And I don't take points off if you didn't, but I want to make sure that you know what it looks like. Same thing with terminations. And guys, write the rules for entry, area inside of triggers, and this is going to help you with accuracy. That's the second page. Print that out. And that takes us to the KISS plan. And this is your trading plan until you can create your own, guys. This is a stepping stone in your learning journey. This is how you're going to optimize your chances of success as a brand new user. Through simulation, study, class feedback, and continuous practice, you'll create your own plan based on your ability to read the indicators. I personally feel as though you don't have to build your own plan if you don't want to. I've had men and women get funded in prop firms in their first 30 days with Nexgen by learning 3 simple rules and managing it effectively. And it's up to you on whether or not you want to go outside of this realm, but you will be able to once you learn how to read your indicators. But before you ever go live, and I say go live, guys, you're on simulator. Knock it around, have fun, try everything if that's what you want to do, but always go back to those 3 rules. Why will I enter a trade? I'll enter because my rules are met. It's such a simple answer. Why will I not enter a trade? Because my rules aren't met. It almost seems too simple, but guys, this is going to be one of the biggest things you struggle with as a trader. Remember that rules are a description of a pattern. That's all it is. The market repeats itself. And you are going to be able to go back and prove this pattern wins more than it loses. You're going to be able to go back and circle those tails and see the pattern repeatedly providing profits. And if you verify it through that process, guys, if you learn to trust it because you've seen it 100 times through your study, there's no reason to ever not enter when the advantages are present, because you will know without doubt that it wins more than it loses, that you will take losers, but you'll likely to take more winners. And that actually helps remove a lot of the emotion out of the trading, because you'll get to the point to where you don't care if it wins or loses as long as you are executing the method properly. And then you have to know why you'll exit. And exits are either taken at profit targets or when the advantage that gets you into the trade is gone. So if I enter a high probability trend trade and 3 divergences print, I'll take an exit. My advantage is gone. If I enter a high probability trend trade and it goes 4 to 5 ticks beyond those trigger lines, I'll exit my trade because my advantage is gone. Sometimes it means I take smaller profits. Sometimes it means I take a loser. But it means that I'm not hoping the market will do something that my indicators say it's not likely to do. So define your entry first, because entries, great entries, smart entries, calculated entries, reduce risk. They maximize profit potential, guys, and they make very manageable trades. So define your entry, and then we're going to do something with it. We have to manage it. This is where you're going to pucker a pleat right in your leather office chair, guys, because now you have something to lose. So as a brand new user, the way your entry is very mechanical. The way your entry is very if-then. It's okay to allow your management to be exactly the same, and that's how I've written this plan. It's based on 2 contracts, and it's designed to help you understand and trust stop placement, where the market should not go, but it's also focused on getting you paid. Hopium is a fictitious drug that everybody smokes. Hopium makes you hold, hoping areas break instead of getting paid at areas. Hopium gets you in on the wrong side of triggers. Hopium leaves huge stops when they're just not necessary. So we're going to learn to take the hope out of it, the emotion out of it, And we're going to learn how to get paid a little bit, guys. And you are going to create your own trading or your own management plan based on your ability reading the indicators. But until you do, let it be mechanical. So if my entry is 2 ticks below resistance inside of triggers, that high probability trend trade entry, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. Hopium does not work, Todd. We have all smoked a hopium bowl. We have gone to the hopium dens. Guys, if my entry is at 71.34, my stop is at 71.49, I have $150 worth of risk per contract on this trade. That's about a $300 risk. I'm okay with that because I have momentum, because I have a clear path, because I've defined and I trust my entry. If you're not okay with the risk, don't take the trade. That's up to you. That's a choice that you have to make. If you try to decrease your risk by putting your stop at an area inside of triggers, it's likely to get hit. You'll watch the market run without you. Even if you keep it in the retracement zone, it has the potential to get hit. The market may run without you. So learn to accept the risk. You'll know where it's at before the trade is ever entered. And your targets are predefined, guys. Only $100 and $200 targets. Remember, it's 2 contracts. We're not going to move those as a brand new user. If you don't get stopped out, it means the market's giving you a reversal bar that prints in the direction of your trade. And you're going to redefine where the market should not go, guys. It should not go 2 ticks above that reversal bar. And we can redefine it as where the market should not go because a reversal bar from an area inside of triggers with a clear path and odds favorable momentum is confirming to you that the market is doing everything you would hope that it would do. And now your risk is $30 per contract as opposed to $150. And it doesn't guarantee a winner. But it means a tiny little loser that really doesn't hurt too bad if they decide to come up and get you. If they don't come get you, it means they went to your first target. Your first target's only $100 away from your amazing entry. And if price reaches your first target, guys, 1 contract is automatically removed. Those funds go into your account. You're a winner. You have success. You're feeling confident. Your sweaty palms are drying up. Your pulse is beginning to rest, guys. And with 1 contract remaining, you're going to move your stop to break even. You're going to take all the risk off that trade. You should have 0 fear. You should say, I don't care what happens. I have nothing to lose and I've already been paid. This second contract, guys, is going to help you develop trust. You're going to trust in the large chart. You're going to trust that with odds favorable and a clear path, it's going to be hard for that market to turn on a dime. It's going to be hard to stop that forward progress, and it's more likely to go to your second target. Doesn't guarantee that it will, but that second contract is 100% designed to create trust. And if they don't come get you break even, it goes to your second target. Your second target was only $200 from your entry. And now you're out of the market, guys. It's over. It's done. You can breathe now. And you just made $300. And one of the things that I hear so often, and I love when people tell me this, Mark, $300 isn't enough. That's not a career. Won't pay my bills. Is anyone else thinking that right now? $300 is just not enough. Guys, this trade began at $9.49, $9.50. This trade was over at $9.52 and change. This is about 2 to 3 minutes of your trading day, and that's a $300 profit, guys. This is a fraction of the time that you're going to spend in the market. This is only one trade with all of those advantages producing results. Even if you pumped the brakes and stopped at $300 a day, that's a $75,000 a year based on 252 trading days a year. There's no doubt in my mind, with a little bit of study, with a little bit of practice, with an awful lot of feedback, you guys will see the potential to be somewhere in this range pretty easy, 600 to 800 a day, putting you up around 150, 200,000. You can begin to use trade copiers where if all you make is $300 a day, you simply double it on a mirrored account. Now you're at 150. If you're making $100 a day, hell, do it 10 accounts. Now you're at $250,000 based on $100 a day. but it's about consistent daily profits. I can't stress this enough. It's about getting paid every day, guys. It's not about hitting home runs. It's not about making $1,000 a trade. It's about taking the best trades, managing them effectively, and then sitting on your hands and doing nothing until the market, until the pattern provides that edge once again. So all of this stuff that I've just dropped in the room, and I'm going to put my spreadsheet in there as well. I updated a lot. Feel free to steal it. You do have a spreadsheet in your Nexgen study picks folder. I'm also giving you a zip file. And ladies and gentlemen, this is the updated this morning zip file. And this zip file contains, dun, 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 I'm going to show you what it contains. It contains Chart Reading 101, which is how you can go through and learn those first two advantages. Inside, you're going to have the high probability trend trade checklist with your picture taking cheat sheet. You're going to have the KISS plan that sets you up for the highest probability trend trade and gives you an initial way to manage it. And then it also has one of those potential to break trades with a different set of rules, which is why it's so important to understand the core rules first and a different management strategy. But both of those are in there. It's going to give you the daily goals. So you can remind yourself that base hits can pay bills. It also has that pictures you can take, reminding you that the more pictures you take, the more likely you are to get to where you want to be. It has exit conditions. If I'm in a trend trade, what's it going to take to get me out? This is a start for as you guys begin to build management plans beyond the KISS plan. I wanted to include this for you. It has the PowerPoint that I use to teach each and every morning, all the upgraded pictures. And then finally, it has that page from the website. The Trend Trade Simple, guys. This is everything that I've talked about over the last hour. This is 3 rules, 2 charts, why we focus on momentum and path first, the rules, the charts, the indicators you're using, defining momentum, termination conditions, defining the entry, everything that you need to be successful with the software, ladies and gentlemen, has just been provided to you. You have the rules. We've broken them down individually. I've given you a way to study them. I've given you a place to put your study materials. You have the ability to simulate, to practice, to post in the room. And even more importantly, guys, I've given you a template on how to annotate for the absolute best feedback, to get the most out of every picture that you put in the room, making sure that you talk about momentum, path, and entry. Because remember, my job is to make you a chart reader, to teach you to understand your indicators. You've also got a plan. You have a solid trading plan that's been proven to win more than it loses. It's your job to learn the looks. The only thing I haven't given you is the experience and the repetition you need to be comfortable recognizing this pattern in a live market. And guys, that's on you. I have given you the greatest hammer you could ever own. You're going to have to learn how to build something with it. You're going to have to learn, how to go through, how to look at your chart, and to say to yourself, I do in fact have odds favorable momentum. I haven't reached the trouble spot, but I don't have an area inside of triggers. And because I don't have an area, because it's on the wrong side of the triggers, I don't know if it's going to stop the market. I don't know if it's going to go to this line, that line, this line, this line, this line. Rule number 3 is not met. That's how quickly your analysis is going to go. So when we come back in the second half, we're going to go through everybody's pictures. We're going to look at those 3 advantages, and I'm just going to give you feedback, guys. I'm not going to grade you on your ability to take a trade. I'm not going to knock you down if you made a mistake. I'm going to teach you how to fix it. But the only thing I ask, and I think I say this about 100 times, tell me what you see so I can give you the greatest feedback. And on that note, I'll leave you with the market. You can see what it does. I'll be back in 5 minutes, guys. Right, guys, let's get back at it. Morgan, if you want to run everything, if you want market flow and all of that, you'll need the premium. You'll need the top of the line there. It's still not very expensive. It's like 40 bucks a month, 45 bucks a month. They run specials a lot. But you do need the premium to be able to run it. And that's it right there. So it's the premium that gets you in, lets you do what you need to do. Guys, I want to show you something cool and why we talk about rules as much as we talk about rules. Why I talk about advantages as much as I talk about advantages. And this is for you newer folks and for you older folks that love to break a rule every now and then. So this is the bar that we're talking about right here, right where the reversal bar happens. Does everyone see that there were strong triggers? Rule number 1 was met, and that there was a clear path on the large chart. And guys, this is about the best look you could ever have on a large chart. So those of you that are a little bit newer with me, do you see it? Smalls below the large, larger wide, space between. Rule number 1 is met. Price has not reached an area. My path is clear. We're below all the other areas. Guys, rule number 3 says sell a pullback in an area inside of triggers. And there are no areas inside of triggers. There's no fib, there's no mid-band, there's no yellow 1-to-1. The only area that I can even see happens to be right where my stop goes, where my advantage is no longer in play. And I look at what the market did. Once you get to the wrong side of those triggers, guys, once you get past the retracement zone, you don't know if the market's going to stop. And I think this is one of the most powerful pictures. Because what this does is this reminds you that large chart advantages are great, but it takes 3. It takes 3 advantages to get you into a high probability trend trade. So I'm going to give you guys this picture. Take it, drop it in your spreadsheet. But when you're talking about entries, it's so important that you use that phrase, areas inside of favorable large triggers, inside of triggers, because rule number 3 is what makes it manageable. All right, guys, we're going to pictures. We're going to start with Joel. He got us going in the wee hours of the morning yesterday. Odds favorable momentum. Hasn't reached the area below the other areas, coming from a strong top. Everything is perfect. Gap theory does not apply here, Joel. I don't know if you're in here. Gap theory, ladies and gentlemen, says that the large triggers are above this reversal bar marker. Pete, it doesn't even matter. Rule number 3 wasn't met, right? You could compound a billion reasons why that trade. I know, but so why overthink it, right? Why overthink it? Why add stuff that doesn't need to be added? Keep it simple. You don't have to break it down and say, well, there was this and there was that, and look at this, and look how the small triggers summed up. All you have to say is that there wasn't an area inside of triggers, my rules weren't met. And I think this is one of the things, and Pete, what you're doing, and I like that you did it. Guys, when you get to a point where you're reading charts, where you understand the advantages, when you know when the advantage isn't there, you're going to think a little differently. You're going to see things a little differently, and you will be tempted to trade your thoughts rather than your rules, your reads rather than your rules. So in the beginning, the more you learn to adhere to rules, the stronger your faith to the perfect is, the more likely you are to succeed. And Pete, I'm not knocking you. I know that you see things, but I'm telling you, you don't have to see them to be successful with this plan. You don't have to know that there's divergence or no divergence on a high probability trend trade unless there's three. You just have to know the rules. And with odds favorable, momentum, and a clear path, a pullback to an area inside of triggers is a great way to get in, make money, get out, break even. Beautiful trade, Joel. Sorry, Pete, not beating you. And then here, 50-50 trade. Potential to break. Not coming from a strong top or bottom. That's rule number one. There's your entry. Beautiful entry. No divergence, but we already broke one rule. And then when divergence prints, you take an entry or you take an exit because that's what meant divergence, no trade. No divergence. It says it over and over. You're devastated. I'll tell you what, I'm going to wrap up and mail you a hug, my friend. I got a giant biker named Tiny. He's going to deliver it next week. Guys, Pete's been with us a long time, and you guys should send him Christmas cards because he really will post some of the greatest lessons, and you'll see such a difference between where you're going and where you are when you watch these more experienced traders and how they read indicators. So, Joel, we broke the first rule. And there's the result. It didn't work out for you. Because you broke the first rule, you changed your management, right? You're not behind the reversal bar marker. But you did adhere to that one. So, guys, avoidable losses. It's one of my favorite phrases. Avoidable losses. What's an avoidable loss? Well, it means that you knowingly get into a trade forfeiting advantages, breaking your rules. And when that happens, you didn't have to lose because your rules weren't met. You didn't even have to be in that trade. And very often you'll find through your trading that that the losses you take that are avoidable are the reason you're not making money on the day. Because your great trades are having to make up for all those negatives when you're trading opinions. All right, Jen, termination condition, weak triggers. Not a termination though, Jen. This is weak triggers in the middle of nowhere because it's crude oil. Those pink 1-to-1s don't always have as much power because they're small swing. But with your belief that this was a termination condition, you let triggers roll on the small chart and you take the perfect HVA entry and perfect targets. And Jen, this is such a great HVA look. And you're using the pink 1-to-1s as a termination, which means that you understand the rules. And instead of saying this could be a top, you're not jumping in, not jumping in, not jumping in, and just beautiful, well-defined entry. Nicely done, Miss Jen. That's a good-looking HVA trade, ladies and gentlemen. That's kind of the trades that you learn as you grow a little bit. And Nexgen's been teaching the same thing. This is what I love. Let me show you a picture. I don't even know how old this is. Probably 20 years. When areas hold, HVA trades are your first opportunity close to that area. And then if the HVA trade works and everything is strong, it turns into a trend trade. And then if you reach the next area, you wait for the reaction. If it breaks, you go back to trend trading. If it rolls, you go to HVA trades. Jen, perfect execution. I like it. I like it when you guys start showing me the next trades, but you show me the next trades with the rules met. That's pretty cool. Not a lot of pictures coming out of you guys today. Sid, we talked about this one as an example. And Sid, as much as I love what's going on an hour and a half behind where you take your trade, I love even more lining it up. So your trade was taken somewhere right here into a divergence high with momentum. And with that small chart, you gathered a little snippet, a little momentum and path. 2, 3, 4. All right, Pete, let's see what you're doing. Pete says, strong to up termination reverses the market. Odds favorable momentum, separation between the small and large. And this always amuses me. It really does. Because your trade was taken back here at 46, a little bit closer. 1, 2, 3 divergences. And then, Pete, you had to suffer through that retracement. Guys, this is such a great lesson. If this top is really going to reverse the market, those large triggers are going to roll. And if you try to take a short before they roll, that's really likely to happen. And then, Pete, check it out. If you just wait for the roll in the reversal bar, you actually get a better entry that never blinks. So even if you weren't going to do the divergences, letting the triggers roll. Not yet, Todd. Not yet. We're getting there. Guys, if it's really going to be a top or bottom, if it's really going to change direction, those large triggers are going to roll. And until they do, you're likely to get caught in a little bit of a dance. And man, I lost a whole folder's worth of pictures, which is a bummer. But if we look at gens, when the triggers roll, it becomes easy. It's the difference between saying this could hold, I'm going to look for the short, and this has held. I'm going to ride with it. And Pete, it looks like you had 3 divergences right at the fib. That's been one of my savior little looks. Is if it's really going to go up, they rolled down here, right? I think it's going to hold. It held. And now everything's up and strong. And Pete, they head faked you. They didn't get your entry and started up. And you said, crap, I better go with them. And then they came back for my trend traders. And the great thing about this trade is, and guys, once again, you can take this trade, but you still know where the correct stop is with a little bit of experience. And it didn't faze Pete a bit. Pete said, dude, this is a trend trade. This is a great looking trend trade. This is an amazing looking trend trade. I know exactly where it may pull back to. I know exactly where it may bounce. I'm just going to hold my position and get in. The one thing that didn't happen is your first target is 2 ticks away from your entry instead of 18 ticks away from your entry, by getting in high instead of low. And this is one of the great things about rule number 3. Rule number 3 is designed to have you buying low, giving you the most room up to your targets. It's a great hold though, Pete. Nicely done. Good lesson in there. And then weak top, triggers down. Let me see where you get in. 61, 13, 13. So I think this was your pullback right here. There's your termination and it hits, termination and it hits. And then you're still not through. There's no momentum. That's a tough one, Pete. You're trading directly into a termination condition. Your small chart doesn't even have momentum. You do get a third divergence and you choose to enter again. And I'm glad that one worked out for you. It would be hard for me. 3 terms to get through. It would be hard for me to say I want to risk my money on 3 termination conditions and 3 divergences and a big range where the market could retrace. And guys, only you can make those decisions. It's so much easier when it's odds favorable and nothing in the way. Find an entry and make some money. And I think that's a more stress-free entry, without a doubt. So guys, I won't tell you you're doing right or wrong. I won't tell you it's good or bad. But I'll tell you that there are times where I think you get lucky trading directly into Fibonacci areas, not having a clear path, not even having small chart momentum to support the trade. And these are the ones that are going to lose more often than they win typically, because even with all that momentum, look at the reaction, right? And even with all that momentum, it only had the potential to break. Whoops. But it didn't. It retraced more. And I like to do this. I like to go back to the market smashing into areas with all that momentum and watching it reverse. And it reminds me that my termination conditions didn't become a rule because of the one time I could beat the system. It's because of the 101 times that area stopped the market's forward progress, produced a loser. My advantage was gone. Area doesn't break. Nice looking exit over here. Big retracement. See, I would have taken a trend trade and lost there. And then when everything rolls, there we go, termination. And when everything rolls, it becomes easy. Nice trade, Pete. I like that. And that's just kind of reinforcing that lesson on the large triggers. When the large triggers roll, the area is saying, okay, here we go. And you did it well. All right, Todd, are you ready? Not a new user entry. No, but it's a great entry. All right. So let's see what we had here. We had, all right, so I'm going to look at all of it. And Todd, I love this because you're hiding one. You're hiding a couple. Odds favorable, momentum, and a clear path, and you get in at the bottom of that bar. Todd, did you use areas inside of triggers to define that entry? You didn't show me this one, but that is gorgeous. Nicely done. You did. I can tell you right now, looking at your large chart. And then Todd, up here, do you notice how you don't have strength and you are way on the wrong side of those triggers? Less likely to work. No advantage of momentum, way on the wrong side of the triggers, and that market went down. And then you get momentum and you have a clear path. You didn't jump back in. You took the perfect short, odds favorable, clear path, pull back to resistance inside the triggers. It never gets outside of that retracement zone, and you carry that momentum down to the fib. I like that you say got squirrely. That's a technical term that usually only really advanced traders understand. I'm going to call it weakness at a fib. So Todd, first annotated chart. I love it. So what I think is you don't have your ATM strategy. We'll go through that next. So let's do this. I'm going to draw an arrow right there. Did you have strong triggers? I'll fix you. Don't worry, Todd. We'll do it together. Did you have strong triggers? Yep. Did you have a clear path? Yep. Did you have an area inside of triggers for entry? Yep. Congratulations, Todd. You took the highest probability trend trade you could ever take from the perfect spot with the perfect stop. And here's the deal. If you had put a stop behind this reversal bar, that would have been fine. KISS plan still would have gotten you $100 and a break even. And then when it pulled back, you could have just re-entered. You did it awesome. So if you wanted to set up the KISS plan, I love that that's your first annotated chart. Yeah, you. Darn right, yeah, you. And just think, 2 weeks ago, we were struggling to figure out momentum. 2 weeks ago, Todd. I told you. All right, so go to your ATM strategies. Are you in front of it with me? And guys, this is for everybody that needs to set one up. If you want to set up the KISS plan, go to custom. So let me take this picture first. Go to your drop-down menu and choose custom. We'll make that picture tiny. And then once you get custom, it's going to give you your options here. So you're going to have to click add. Click add so you have 2 targets. And watch this. This is why I like Snagit. Is we can kind of splice things together. So since you have 2 targets, you need 1 contract on each target. Stop losses, guys, for crude oil for the S&P, 12 ticks is amazing. 12 ticks is not your stop. 12 ticks gives you time to put it where the market should not go. So in the KISS plan, and this is crude oil, Todd, 10 ticks equals $100. 20 ticks, and you could just type in 20, equals $200. So your KISS plan, this is the KISS management. KISS plan for crude oil. 12 tick stop. 10 and 20 targets. And this is going to be what you put in there. If it were for the ES, it would still be 12 tick stop. Targets would be 8 and 16 because it has a different tick value. So what happens, Todd, is when you have this template in there, the KISS plan, and you get into the market, we'll go long, your stop's in place, your first target's at $100, your second target's at $200. So if it comes up and hits your first target, it pulls that first contract off and you still have 1 contract left. Does that make sense? So your ATM strategy will already divide those targets. And let's say you're like, man, it's a little tight. You just click on a line and lower it to the fib. And you're like, you know what? I'm going to take all my money off there. You can click and you can combine the 2. And now you've got 2 targets right at the fib. Your stop can go where the market shouldn't go. When it's time to move stops, you can click that line and bring it up. And then if it hits your targets, it'll pull you right out. If it hits your stop, it'll pull you right out. So play with that a little bit too, guys. Go through and mess around with your ATM strategies. Go through and practice moving stops and targets. And then anybody in the room say, Mark, why are you going long into a termination condition? You know better than that, you Yahoo. It's okay to call me a Yahoo when I do stuff like that. And Todd, there's a lot of little mechanics things that will become very second nature to you. All right. Everything down from the termination. Every indicator agrees. You took profits on the last one, I love. And you waited for a couple down bars before failing to reach the mid-band so you didn't get head faked again. And with every indicator down, you went down with it and got out of trouble. Nice trade, Pete. Nice trade, Pete. But let me show you guys. So Pete goes, not a new user trade again. I love using Pete as an example. I hope you don't mind. Pete reads, all indicators on every chart are down. Pete says, hold my beer, I'm going short. I'll find a way. Hey guys, this is where you're going to get to. When you start learning to read, learning to believe, and recognizing things, when every indicator on every chart agrees, you're probably going to find a way. And Pete just doesn't jump back in. Pete says, you know what? Let me let them fight. Let me let the buyers try to push it up. And when they fail, I'm going to go down with every indicator that says down. That's what this retracement is. That's the buyers trying to make the market go up. And those down bars are the sellers. That divergence is the sellers telling the buyers to go to hell. We're going down with the large chart. Pete sees it, recognizes it, and finds an easy $440 on the way down. I mean, just really nicely done. But the faster you can read charts, the more in tune with what they're telling you that you are, it's crazy. You'll find a way. Not a strong top, just divergence triggers roll. Jen, I'm going to fight you on this one. You ready? Get your dukes up, Jen. Price reached resistance. Every trigger remained below. And the large triggers couldn't even roll. I would call this a strong top all day. Because if a strong top can reverse the market, wouldn't a termination that the large triggers couldn't even go against it? That's a pretty impactful look. I love this look. And this is one of the reasons why after a strong trend, guys, you don't go short until those large triggers go in the direction. It's a big, slow moving average. I love this. It's not a traditional strong top, Jen, but when I see it, I will fudge the definition, and I'll show you exactly what I mean. That's the one that you just had. Let's see if we can find. Here's another good example. Price gets to that resistance, tries to break, and when it pulls all the way back and hits that termination condition, nothing blinks. Isn't that a great indication that the market wants to continue up? I love this look. There it is again, Jen. That's a confidence inspiring look. There we go again. There's the exact same look. I love this look, especially coming off a bad top. I can't wait to go long. So Todd, a strong top and bottom is so easy. And it's a very definitive recipe. It is a 100% for brand new users. Two things have to happen. And I'm going to give you this little reading material. I don't know if you've noticed yet. I love to give you guys little snippets, little blogs, little videos to make life easier. So a strong top or bottom is and always will be first a termination condition. Price reaches an area, triggers don't break, it's a termination condition. Does that make sense, Todd? If those large triggers pinch and roll from green to red, that's your reversal. Now it's a strong top. A strong top or bottom is a no triggers through termination that reverses the market. There's your definition. There's your cheater on the bottom. First, it's a termination, and then it reverses the market. And I took this one this morning. Same thing. First, it's a termination, then it reverses the market. First, it's a termination, then it reverses the market. Here it is only a termination condition, Todd. And the only way this could ever become a strong top is if the large triggers roll. Does that make sense? And you don't need a strong top or bottom to be it's not rule number one for a trend trade. A strong top or bottom sets you up for the highest probability trend trade you could take. A strong top or bottom is rule number one for that 50-50 trade, that medium probability trade. A strong top or bottom is rule number one for an HVA trade, for a momentum trade. But when you have a strong top or bottom, Jen has odds favorable momentum. She didn't take the pullback. It didn't reach her area. And then once she clears anything that could create a bounce, she rides that momentum down and just makes money. Just a base hit. So that is 9.3. That's $120. That's not so bad. Jen, I still can't, for the life of me, understand why you're taking 3-tick profits. With momentum and clear path on both charts, what's got you spooked? 3-tick profits. You don't have to answer out loud. And let me expand on that. Okay, so you're fearful because it's real money. Oh, do you see how I did that? You're fearful because it's real money. What does that mean? Oh, Jen, you opened a can of worms. Here we go. You know where we're headed. I love that you let me do this, and I love that you're such a good sport about it. You and Pete both. What you're telling me, Jen, you do trust it logically, but not emotionally yet. So you're building trust in the idea that with this look on the large chart, the market's more likely to go down than up, right? And then you're building trust that when it's mirrored on the small chart, it's more likely to go down than it is to go up. But you're not there yet, which is okay. And let me tell you why it's okay and why I'm not going to beat you up for this. Because, guys, the difference between simulator and real is trust. The difference between being able to trade on simulator the way you would trade, or being able to trade in a live market the way you trade on simulator, is creating a disconnect between the money and the process. Because the process is not the money. The process is what leads to the money. The process is what makes the money consistent. And that's an emotional hurdle, isn't it? And I like that, Jen. And you have to do that, and you have to trust it. And here's the cool thing. And Jen, I'm going to celebrate more than I beat up on this one. When you take quick profits, you're more likely to hold, right? When you have something in the bank, even if it's $30, you're more likely to hold that second contract. You're more likely to let that trade do what it's going to do. So what you're doing right now, this is your pacifier. This is your security blanket. Jen, you don't care about two contracts. You care about one quick win to calm your nerves and then let the second one do what it does. I think it's brilliant. And I think that's a great way because you have the skill set to be successful live, but you understand that it's a different emotional reaction, and you're creating the ability for you to trust that second contract by taking profits on the first. And I think what you're doing is a great way to trick your brain. Nicely done. And it makes sense. But sometimes, guys, I know exactly what you're doing, but I want to talk it out for everyone else. And this is one of the reasons that quick profits, the eval accounts are very different emotions, aren't they? Because now it's real. Jen, I have a chair next to my chair for my testicles when I'm on sim. Sorry, that's so crass, and I apologize for that, everybody listening. But most of us do. You'll have one for your ovaries. On simulator, you'll hold through areas. You'll hold through 3 divergences. You'll enter from the wrong side of the triggers. Yeah, because you're like, who cares? It doesn't matter. Nothing bad can happen. And if you practice that way, it's going to be hard to hold these trades for real. It's a great trade. And you got paid, Jen. Do that 5 more times. Do that 5 more times. Every day. $120, 5 times. You'll never work another day in your life. Learn how to do it every day. Great job, Jen. How was that for a beating? That was a pretty calm beating, wasn't it? And you actually waited for it to have momentum. It's hard to stop momentum. That's why I talk about trust a lot. That's why I talk about trust a lot. I can tell you guys that with odds favorable momentum, the market's likely to continue in the direction of the trend. Or you can go back on a large chart and miss it 3 times. You can go back on a large chart and you can say, wow, with momentum, it went down and broke areas. And when they didn't match, we had a little bit of a dance. And with momentum, it continued up. And with momentum, it continued up. And with momentum, it continued down. And we're just developing trust. That's all it is. That's all it is. And now I have momentum. And this divergence low has the potential to break. And if I get a reversal bar, I have a clearly defined area inside of the retracement zone. Does everybody see it? This is how fast it happens. Still the potential to break. Still an area inside of triggers. Still from a strong top. Guys, this is one of those pre-trade pictures where I would take it and then just close it. And then I'm going to come back and make sure I didn't miss part of something. 2 ticks below a mid band. Has the potential to break. The triggers are strong. There's my reversal bar. The market may retrace somewhere from the bottom to the top. It's most likely to bounce off the area inside. My limit order goes 2 ticks below it. Ladies and gentlemen, this is a medium probability 50-50 trade. 50% of my triggers are through, 50% are not, and they are working their hardest to turn it into a high probability trade. And right now, all my advantages are still in place. Do you guys see it? And now I've done everything I can do. I've done everything I'm in control of. And if they hit these key areas, I have to cancel because then it's a termination. Sorry, Joel, we cut you short here. Everything set up, you went up with it and got paid twice. Everything, termination, triggers rolled. You let the small chart confirm through odds favorable momentum, it's more likely to go down. And easy peasy. Joel, I love it. And Joel, one of the things that I've noticed, and we talked about this the other day, but I want to point it out to people. Joel uses higher time frames, guys. He uses a 21 and a 13, not a 13 and a 5. And that little tail that he sees is that fight. That's the buyers trying to take over. And when they try and fail, that's his cue to take an entry. That's brilliant. I love it. Everything says down, he goes down with it and finds a way to get paid. Everything says down, strong triggers from a termination. He doesn't catch it on the way up. He catches it on the way down. Easy money. Guys, give me a Y if you can hear me, please. Thank you. There we go. We'll see if we get him to reboot. And guys, if you ever can't hear me, make sure you tell me. And I'll ask the room. I'll be like, hey, guys, can you hear me? And you'll see that flood of Ys. And that flood of Ys says, guess what? Guess what? It might be on your end. Go do a reboot. Joel, great trading, man. Great trading. Tucky. Now we have Tucky. Tucky says, check it out, Mark. I thought we had good momentum with large gaps between large and small triggers. You did. Tucky's sexy as all get out, isn't it? Tucky, are you with me in here? Tucky. All right, so let's do this. Maybe he'll watch the video. Ladies and gentlemen, what rule did he break? Nope, Joel, rule number 1 is strong triggers. Whoops. Term. So rule 1, strong triggers. That's a yes, absolutely. Seriously, you said okay. Perfect, Joel. We'll see if we can get these people back. There we go. All right, so rule number 1, strong triggers. And then I'm going to do this right here, and I'm going to write out the recipe for a termination condition. Morgan. Price reaches resistance. Triggers remain below. This is a termination condition. And I'm not sure where Tucky went, but guys, I want you to know this. If he loses this trade, this is an avoidable loss. And I want you to see this as well. Oh, hold on. Let me write this. Rule 2, not met at all. Does everybody get that? Price reached resistance, triggered remain below. This is the termination condition. Rule number 2 is not met. Rule 3 says, buy a pullback at an area inside of large triggers. Rule 3 not met. This is an early entry. Not at an area inside triggers. Does that make sense, everybody? Sorry about the caps. I know it's not me, so we're gonna try and get these guys set up. Hopefully they can hear. Gonna try to get there. It's what we do. So guys, one of the things you can do, let me finish this lesson, is that if you go through and you can't answer yes, right? If you go through this process every day, it's in the trigger, 100%, Jerry. But that doesn't negate the fact that rule number 2 isn't met, right? And you have to treat your rules like a flow chart. Just because I have momentum doesn't mean that I could ignore clear path and entry. Once one of these goes away, it's no longer high probability. And guys, this is how speaking in terms of advantages pays huge dividends. Because if I look at my chart and I say to myself, man, I have momentum. I know I have momentum. Life is good. And then I look at that same chart and I say, dag nabbit, I don't have a clear path. Guys, having 2 out of 3 advantages is a medium probability trade. So insist on it. So what you have to do, Jerry, is if you have momentum but you don't have a clear path, you should be hell-bent on an area inside of triggers and following that recipe. Because now you're in a medium probability scenario. Does that make sense? So when we look at Tucky's entry, this is his entry with absolutely no room to a target or to trouble. This would be the first potential entry. This is where the market shouldn't go if it's really going to bounce up. So by jumping in all the way up here, you have to sit through all of this. This is the expectation, if it even goes up at all. And it did, it retested. and then it dropped like a ton of bricks. One of the reasons we don't trade into termination conditions. But if you know how to identify these three rules, what happens is you can at least give yourself a fighting chance from the best of the best area if they're going to go retest. And you're going to do it simply by talking about advantages. My smalls are still kind of outside of the triggers, but I don't have a clear path. I don't know. I don't feel comfortable. My momentum is going away. My path isn't there. I don't care about an entry. I've given up 2/3 of my advantages. And that's what you'll do, guys. And this is why I talk about advantages every day. If you can just learn those three advantages, if you can just talk about them every time you take a trade, you'll know what you're up against. And when you say things like, I'm losing momentum, my path isn't clear, why the hell am I looking for an entry? That's not a great look. Why would I do it? And you start saying to yourself, I don't have to be in this trade. I don't have to trade into zones, into areas. I don't have to trade without momentum. Because if I'm patient, I'm going to find a way. And I'm going to make all the money I could ever spend trading away from areas. Trading to get to areas. And guys, that's kind of what this whole classroom revolves around. I don't have momentum. My triggers are flat. Every termination under the sun. And Pete says, F it, I'm going short. And he gets paid. So Pete, the momentum style look entry is perfect. You're trading directly into a termination once again. It reached that divergence low to the tick. It didn't even have the potential to break the one above it. But look at that momentum. This is banking on small chart momentum. And Pete, you do it better than anyone I've seen. Just looking for 10 ticks to get to the fib. And that's fine, right? That is your right to do it. But it's my job to say you're trading into everything bad. Small chart momentum saved you. Quick profits, you didn't get greedy. Not mad at the trade. I just got to point it out for the classroom. You new kids aren't gonna have the speed to pull these trades off the way they need to be pulled off. And then when it does break, when the momentum is there, when the path is clear, it's easy, right? All the momentum and path, it's effortless. And I find it interesting, Pete, that you didn't take this momentum style trade when it was perfect, but you took this one when it was 32 flavors of garbage. I love notice because I noticed this in myself as well. I noticed this trend in myself. I'll take the aggressive, I hope it breaks because it's been too long. And then when I make a little bit of money, for whatever reason, I miss the perfect one. Early onset dementia. It's Monday, man. It's early on Monday. You're good. But you see how that's the exact same entry, the exact same conditions on the small chart, only 1,000 times better because the large chart supports it? That's the Nexgen momentum trade. That's easy peasy. Good stuff, Pete. One day we'll meet in person. You're like, man, he's not nearly as critical outside of the room. So Joel, odds favorable momentum and a clear path on the large chart. You let the small crowd fight and fail, and you take your entry up to trouble. So Joel, can we say you have a trading plan, my friend? And guys, Joel, I'm going to ask you real quick. Can I put our conversations out there for everybody? Because I really want to talk about the process that we've gone through, that you've gone through. what was it, 3 weeks ago, maybe 4 weeks ago, Joel? Probably 3 weeks. It hasn't been that long. 3 weeks ago, Joel would post, I would say 25 to 30 charts in the room. Just study. And that's exactly what the room is for, and it's great. And the one thing that I noticed is, and let's just, so I can type it out, is out of 20 trades, I would say there were probably 6 to 7 different entry conditions and a lot of losers. And this was how we started. And this is awesome. And this is where everybody starts. So please don't feel like I'm saying, dang it, Joel, why did you show me all those losers? And then we talked about a couple advantages, things on the large chart. And then he starts showing me probably another 20 trades with 3 to 4 different entries. And much fewer losers. Because now he's starting to find his mojo. He's starting to find his groove. He's starting to trust momentum and path. And he's starting to define his entries really well. And Joel, I feel like we've gotten to the point where you're showing me half the trades. And there's about 2 entries. And it's darn near all winners. And every now and then they don't work, and you accept that. But I feel pretty comfortable saying you're probably at least 85% now. Guys, this is the path. Take them all. But let's talk about them. Let's talk about what's good, and let's talk about what's bad. And then what happens is Joel was refining himself to one look. And it let the large chart lead the way with momentum. And he figured out how to capture the entry on the small chart and get paid. And Joel, I got to tell you, I'm as proud as I can be, and I'm as happy as I can be to have watched you go through this process in such a short time. To watch you go from wanting all the money to demanding your looks, to taking the best money. And guys, that's what Nexgen's been doing for 20 years. Is feedback every day on everything you do, and the whole purpose is to try and get you where you're going, to try to get you to the good stuff, get you to the trades that have the most advantages, that are repeatable, that are testable, and that are giving you what you need as a trader. So thank you for sharing that. Thank you for letting me tell your story a little bit there. And Joel's not alone, guys. There's a lot of people, I would say even in this room, that we've gone through this with, whether it's management or entries or exits or whatever. And I love the feedback, and I love the educational process, guys. And there's no doubt in my mind, whether it has been a month or whether it's been 5 years, guys, with a little bit of understanding and a little bit of adherence, right? The most successful traders are the ones that can do nothing when there's nothing to do. The most successful traders have the same entry every time because it's been proven to win more than it loses. The most successful traders, guys, are boring as hell. And they sit on their hands and they do nothing, and they play games off to the side. And I found a new game. I play golf now off to the side instead of solitaire. And I'm happy as a clam because I get to do 2 things I love. Read indicators and play golf. So it's good stuff. All right, guys, I'm going to take my second break. Great second hour. A lot of good looks, guys. I hope if you're, and let me say this before we go to the final hour. If you are brand new, Todd, you're one of my people, right? DeLuca, you're one of my people. Aaron, Bejoy. If you're brand new and you're not posting in my room, what are you doing, guys? What are you doing? You need to know what you're doing right or wrong. I'll tell you if I can see it. If you don't show it to me, I can't help you. Get that feedback. That feedback's what takes you next level, guys. That feedback's what helps you grow your own plan. Yeah, Todd, you're doing the process, right? You had a challenge, you presented it, we worked through it, and now you're over it. And now we go to the next challenge on the way to the goals. That's how life works, guys. Jump a hurdle every now and then. It works out. I'm going to take 5 minutes. I'm going to go refill my water real quick. I don't know if this termination condition is going to hold or break, but I know that my rules aren't met. So I'm choosing not to trade into it. You guys do whatever fits your plan. I'll be back in a few minutes. When I come back, we're going to start talking about TradingView. No, it doesn't. Unless you've got those two computers connected to one another, Todd, it won't work. Awesome. DeLuca, start asking questions. I know you're taking notes and you're like, I want to get it in before I start participating. Please stop me. Mark, why do the rules say don't do this? Force me to talk through it. I find a lot of times conversations creates longevity in the lessons more than hoping you get them on your own. So I'll be back in a couple minutes. Jerry S., I meant to tell you this earlier. And for all of you folks that want to learn TradingView that are going towards that, and I love it. I'm excited to teach it. But John Novak will have the room on Friday from start to finish. It is. DeLuca, I have a picture for you. That's what it feels like in the beginning, doesn't it? Holy smokes. Oh my gosh, egads and little fishes. So DeLuca, before I take a break, I want to give you this. I'm going to drop it in the room. It's in that zip file that I dropped in the room this morning as well. This document is called Trend Trade Simple, and this is for everybody. And then I'll take a break after because whatever. But Jerry, John has the room start to finish on Friday. For all of you folks that are curious about TradingView, funding company, all that stuff, it's going to be an amazing couple hours. Be here Friday. He usually triples my room count when he takes a room. So 5 days a week, we're going to teach you 3 rules on 2 charts, guys. That's what I'm here to do. And it's going to give you the skill set. I love that word. I don't know why. To recognize advantages and turn them into the trades. That's all we're doing. These are my advantages. I have the advantages I need to take a trade. DeLuca, that's every day. This is what I talk about. Same thing. Each rule is discussed individually, and you're going to understand how to piece them together to create the highest probability trade. So momentum and path are the first thing. This is the core. And then we're going to define an entry when those advantages are in play. So momentum and path alone is enough to build a trading plan that's consistent and profitable. So when I talk about the education process, knowing full well it feels like this, DeLuca, if you, instead of looking for the trades, you look for the first advantage. You say, you know what? I'm new. I know I'm not going to know everything in the beginning. I'm going to give myself a little bit of grace. I'm going to learn how to identify the first advantage. I'm going to learn how to identify momentum. That's it. That's the only pressure I'm going to put on myself, is to study momentum enough to where it becomes second nature. And then once I understand that concept, I'm going to start going after this clear path Mark's talking about. I'm going to be able to recognize a termination condition. I'm going to have a recipe for it. I'm going to study it. I'm going to commit it to memory. And DeLuca, by like the 3rd or 4th day, you're going to be looking at your charts and you're going to be saying, oh my gosh, I have momentum and I have a clear path. What the hell do I do with it? And that's where you start to study the entries. And that's where, when we talk about the entries, the one thing we're doing is we're letting the large chart, those first lessons, lead the way. And then it's just a pattern. And it's all spelled out for you. And that's what that document that I just dropped in the chart does. It goes through the indicators that you're using, learn those, recognize momentum, define a termination, pinpoint an entry. And if you, rather than try to become a trader, become a chart reader, recognize these little things as individual concepts first. Being able to define a trigger line, small and large. And then being able to know the names of areas so that you can use them for entries and terminations. Keep it simple. Embrace that keep it simple sunshine idea. And you will get to where you want to be sooner than later, DeLuca. And I'm here with you for the whole ride. And I'm here to help you read charts. And I'm here to help you recognize advantages. And I'm here to give you the same darn plan every day that's been proven to win more than it loses until we can get rid of that feeling. And Todd cracked me up last week. He's like, hey, Mart, the fire hose turned into a garden hose. And that was last week that Todd said that to me. And this week, 2 weeks in, yeah, Todd, I'm going to brag a little bit on you. Todd pinpointed the perfect entry for the highest probability trend trade that we teach. And it took him less than 10 trading days, less than 2 weeks, from fire hose to perfect entry. And that's what happens when you break it down and you just believe that you're going to get there if you keep it simple. Look at that termination condition stopping the market. Guys, I'll be back in 5 minutes. When I come back, we'll do live chart reads. We'll talk about TradingView. And I'm here to answer questions. Any questions you have, guys. I'll see you in a few. I am back. You guys hear me okay? I hope it works too. Joel's got me. Thank you, Joel. Man, they're fighting at that termination condition, but whoo, they're having trouble. That's okay. So guys, Ninja Trader, 2 charts, momentum and area, right? 2 charts, momentum and areas. And it's kind of crazy because if you choose to go to TradingView, it's 2 charts, momentum and area. And that's kind of all it is 2 charts, momentum and area. And we're just going to do kind of the same thing. We're going to wait for advantages. No mo, no clear path, and look at it bouncing, right? This is the fight. This is pretty cool. You know where decisions can be made. Guys, these are them fighting at the area, trying to make that decisions. These are sellers trying to continue to push the market down. These are buyers wanting the market to go up. The buyers say up, the sellers say no. The buyers say up, the sellers say no. The buyers say up, the sellers say, we don't know what they're going to say yet. 3 divergences can stop a trend. Weak triggers at a fib can stop a trend. Second the bad, too often when you press buy, it stops you out before the price even moves in the middle of the night when the market isn't moving. On TradingView, Andy, because remember they're minute bars, right? A lot can happen in a minute. You can have a spike in the middle of nowhere for no reason at all in the middle of the night. Guys, volume is one of the biggest assets a trend trader has. So maybe what you're learning is that the middle of the night isn't the best time to trade. Volume, guys, volume is key. Andy, show me what you're doing. Show me pictures. And guys, this is one of the things. We can have that conversation all day. I did this and it stopped me out. Well, Andy, show me what you did. You could make a movie, but the picture won't happen. Why? I'm sorry, I'm confused. And I'm picking up that you're frustrated, and I'm sorry that you're frustrated. But it doesn't matter. Even if you get stopped out, guys, here, watch this. What price was that? $29.26. I got stopped out, Andy, 2 hours ago, almost 2.5 hours ago. I can still take the picture. No matter how fast it happened, I can still take the picture. This whole bar from 9:20 to 7:79. This took 15 minutes. So you can still see it. You can still show me where you got in. You can still show me what the conditions were. You can still show me the areas you traded from. But you're not following me, Andy. Go take a picture of it. Let's see what the trigger line said. Let's see what the areas were doing. Are you using paper trading? Did you pay for data or are you on delayed data? Do you have a delay or is it real time? It sounds like you're on delay. I pay $7 a month for my live data through TradingView. So if you haven't gotten your data, there's a good chance you're delayed, which is exactly why that's happening. See, we get there eventually. I needed that it didn't come close to my price. That's what I needed. So you're probably on delayed data. We can fix anything, guys. All right, so I'm going to go through real quick. And I do want to intro to TradingView. And I do want to talk about the stuff that you're going to see if you choose to go to TradingView. And guys, let me say, if you want to use the funding company, you will need TradingView. I use a combination in my own personal trading where I use NinjaTrader and I execute on NinjaTrader, and because obviously I can't use the funding company, but I'll use it sometimes to take trades that Nexgen's going to be teaching on TradingView. I'll use the two together. So this is a little intro, and I did this because I want you guys to realize we just want you to be successful. Of course, we want everybody to be on the funding company. We want you guys a part of it with us the same way you have been with software. But I understand there's some of you that have Ninja. You're not leaving Ninja. That's okay. This isn't for you. But you guys that do want to be a part of the funding company, and you want to join the 60 million already users on TradingView, Nexgen has created a package so that you can do that. And if you're a lifetime member, you get it for free, guys. You've already paid for indicators. You're going to get these indicators for free if you're a lifetime software owner. And you're going to notice that we have small triggers and large triggers the exact same way. That's one of the indicators that you'll get. You're going to get divergence the same way you have on Ninja. You're going to get one-to-ones. You're going to get a mid-band. This one, same outer bands that you see on Market Flow. The difference where it comes in, guys, is we can't get Fibonacci on TradingView. They can't program it to make it work, or Renko bars. So using supply and demand. Supply and demand is old as time itself. And they will behave very much like Fibonacci. Zones to trade to, zones to trade from. You could even, if you're using NinjaTrader, like we all are, let me show you guys what my trading looks like. I'll execute on NinjaTrader, but it fits the rules on TradingView, and it's just a momentum trade. There we go. This is one of the trades that Nexgen is going to teach with all the odds favorable momentum. Buy a pullback to the zone. There it is. Write it up. So zones and fibs, guys, very similar. You're going to have a 15-minute chart and a 1-minute chart. 1-minute chart, if you have the premium for TradingView, you'll be able to have Market Flow, which opens the door for the HVA trade, which opens the door for using high volume areas for momentum trades. And the complete workspace is big chart, small chart, 15-minute, 1-minute. Broad stroke of a brush showing everything that the market kind of thinks and wants. Nice little refinement chart, helping you pinpoint entries so they work together. And they're going to use momentum. We're going to use momentum, guys. The same way we use it. It is the exact same picture that I've used to teach for the last 5 years. Separation, scissors open, weakness, scissors closed. Zones and areas, termination conditions, supply and demand zones. Think of them as resistance and support. One-to-ones, just like on a large chart, areas that can stop a market. Don't trade into them. And then something that's kind of new is one-to-ones in a zone. Guys, this is the kiss of death. What a great profit target. I love entering at these spots. And it just uses one-to-ones and zones together. Divergence is on there, which means that you have pivot stop outs the same way we have now. Large chart leads the way very often, has up. But if the small chart has a termination condition, this is one of the changes. So you guys that are thinking of transitioning, these areas on a small chart can stop the market just like they do on a big chart. So even if this chart says up and everything is great, your small chart, can talk you out of it a little bit. And until price reaches an area, guys, it's a target. When price reaches an area, it can behave as a termination. 3 divergences can still stop a market. I haven't said anything new. I haven't presented anything new other than maybe supply and demand. It's still momentum. It's still areas, guys. It's still Nexgen. It's the same thing Nexgen's been teaching for 30 years. And we're going to break it down, and you guys will get a plan. Let me drop the plan in the room for you. I'll do it in PDF. Everybody can get a PDF. That's the very basic plan, the first run of the plan. Plans are a living document. It may change over time if we can find a way to make it better, clearer. There's also a trend trade journal that I'm dropping in here. I drop spreadsheets in the room all the time. And this is exactly like it is on the other one, guys. I'm starting to take the pictures of the trades that we're going to teach, a little bit on management. I'm going to gather termination conditions, no more longs, no more shorts. All that's available for you in that one that I just did. There's the HVA trade. Jen showed us a beautiful one on NinjaTrader. It's the same thing on HVA or on TradingView. First, you have a termination, guys. And then the market rolls from that termination, and then you buy or sell an HVA line. And this is the same trade that Nexgen has been teaching since 2004. If an area stops the market, let the triggers roll on the smaller, faster chart. Sell a pullback to the pink line. Opposite is true. Support holds, let the small chart roll. Buy a green line. Guys, this is your first opportunity for entry from a key area. And this is your HVA trade. Then, of course, there's trend trades. Clear path on the large chart. Clear path on the small chart. And then entries are a little different. We're not selling the mid-band inside of triggers. We're selling a close on the correct side of those smaller, faster triggers because this is a 1 minute chart, not a Renko chart. This 1 minute chart will really help patience. It slows the market down. And a close on the correct side when everything is perfect creates a beautiful trend trade. These are all trades that you can go back and study. And then, of course, the momentum trades, guys. We've been teaching this one forever as well. Strong triggers, nothing in the way. Buy a pullback to the one-to-ones. Buy a pullback to the top of the zone. Buy the pullback from mid-band. I dropped the spreadsheet in there, Jerry, for you, which has even more pictures than this. Here, let me drop the PowerPoint in the room for you. There you go. So this is everything that I was just going through. So now you have it. Yeah, no worries. And guys, I want you to start using this room the same way we use the morning classroom, right? If you have a termination, where did that one start? I think that was it right there. Triggers roll, buy a pullback to the HVA line. There it is right there. and it's still going up. Zone holds, triggers roll, buy a pullback to the HVA. Guys, that's an HVA trade. Plain and simple. With everything going down, let's see if there was a trend trade in there. Price pulls back to the mid band. Shoot, small triggers didn't even follow. There's a potential trend trade. So you can go back and you can circle these as well. Let's see what happened at this termination condition up here. Maybe we got an HVA trade out of it. Let me squeeze this together. That was at about 6:30 a.m. Don't have an HVA line. Maybe not an HVA trade. But it came down and turned into a beautiful trend trade. And then another beautiful trend trade. And then another beautiful trend trade right at an HVA. Steve, they match my computer. So yeah, my times are Eastern on here. But we're not going back and calculating Fibonacci, so it doesn't matter what time your stuff is set to. Sure, Josh. So Steve, the time zone matters on NinjaTrader because your software begins to calculate at midnight, and if we all have different midnights, it's going to run different calculations. All right, so Josh, momentum is great, right? It's really not even one of the rules. But I'm going to tell you, of course, trading with momentum is good. So no areas reached on the 1 or 5 minutes. So when you're looking at your large chart, Josh, it should look like this, the same look as any other trend trade that you're looking for. You have a market with momentum and nothing in the way. Does that make sense? That's a pretty familiar rule number 1. Because it's, no, it doesn't matter, Andy. It'll look exactly the same. On NinjaTrader, yes. It's easier to compare charts if we're all in the same time zone. On TradingView, it doesn't matter. Doesn't matter. So the second thing is make sure that your small chart doesn't have a termination. No, because the bars, yeah, I guess, maybe. Andy? Yeah, you're right. It would be easier, but to be honest with you, Andy, I don't care if you guys can find my trades. If you post in the room and you say, hey, Mark, on Pacific time, you're going to give me everything I need to find it. I like it. Yeah, me too. So, large chart says strong and down. Small chart says strong and down. Neither of them have reached areas. Josh, sounds pretty familiar, doesn't it? Momentum and path, right? Momentum and path. Let the market pull back to the mid band, but don't just jump in. Take a close on the correct side of the smalls. That's your trend trade. That's it. Notice that I didn't say take a trend trade at an area inside of triggers. That's a little different because it's a 1 minute. You're looking for the mid band. If it lines up with zones, even better. If it lines up with zones in an HVA, even better. But the one thing that you don't want to do, and anybody with market flow experience, you don't want to fight these fast triggers. So you wait for the close on the other side. On the trade side. Right there. And that's it, Josh. Exactly, Andy. So that's your trend trade. So let's go back and see if we can find a few. Let's go to a market with a little more flow. Shoot, there it is on a big time frame. 755. Pretty much, yeah, with all of them. So Jen, do you remember the lesson? As long as we're not closing on the wrong side of these triggers, it's probably going up. Do you guys remember when we talked about that before? When you're on the good side of those triggers, it's probably going down. So if you were looking for a trend trade here, you never get a close on the good side of the triggers, and you never take a loser. And if you were looking for a trend trade short here, you never get a close on the wrong side of on the good side of the triggers, and you don't take the loser. And that's one of the things when you're using this 1 minute chart, that it's gonna pay dividends for you, because you're gonna learn how to not fight. There's a lot of consolidation. Let's see what this looks like on the large chart too. But there's your entry, right? Pull back to the mid band, close on the correct side. Everything is up, you're above the zone. Do you get, Josh, do you see it? So right about here is where your pullback starts. The market comes down. You're like, oh, I'm at the mid band. I can't wait to get in. But it's on the wrong side of the triggers. And you're like, oh, there's another one I want to get in. But it's on the wrong side of the triggers. And then this one closes on the correct side. And I'll be darned, it runs right up. And then it pivots at that zone a little bit. But this close is at 32. First trouble's 2.5 points. That's at 38. That's 6 points to get to that next zone up. And this chart says we're going up for the duration. And that one doesn't have another one until 48, 16 points later. And one of the things that this 15-minute chart's going to do for you guys is that when it's screaming in the direction of a trend, when that thing is odds favorable momentum and nothing in the way, you're going to find that you're able to hold for bigger moves. And that's a lot of fun. It's a lot of fun to get a big move. So it really is familiar. And again, I stink at analogies. I say, guys, this is the lady you love. This is everything that you're familiar with. And it's just packaged a little differently. It's the exact same methodology Nexgen has been teaching for 30 years. And it's actually going back to the bars. It's going back to the bars that Nexgen started teaching on. Joe, there is no building. There's no building. Go to the Pro Trading Company page. There's home base for you guys. Go to instructions. Dun, 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 dun. No, don't be sorry. I'm just telling you, it's easy. Right here from Get Access. There's the trading plan. And there's all your pre-made workspaces. 100%. So you don't have to build anything. John Novak's already built them for you. And guys, you're going to get, with the $99, you lifetime owners. Let's scroll back up. I'll show you what you're going to get. Where did it go? You're going to get trigger lines, 1-to-1s, divergence highs and lows. You're going to get mid bands. You're going to get market flow. All of that's coming to you for free. The only thing you guys will have to buy or find a free version of is supply and demand zones. These red and green zones that they make. I use a product called Chart Prime. They're an indicator company. And let me show you real quick. Dun, dun, dun. This is Chart Prime. And they're running a special. It's $32 a month if you just pay it annually. It's like $4.89 for the year. Supply and demand. They're great. I love them. There's a lot of free versions out there. You can go through and look at them. The one that is free, let me give you guys the look, is this one right here, Algo Alpha's Dynamic Supply and Demand. That is a free version. We've done a lot of testing. It's not as good as Chart Prime, but it is good. I think it's 20% off, Steve. If you pay for the year in advance, it's 20% off with Chart Prime. Little leverage. That's why I don't trade stocks. That is precisely why I don't trade stocks. Well, your leverage is 1-to-1. So if you buy $1 in stocks, Andy, you control $1. In futures, if you buy $1, you're controlling 20. It's the leverage. It's the same reason we can get in at a number and it's worth $10, $20, $12.50. It's the leverage that works. I don't believe it does, Steve. I believe you have to purchase it. Markets, all of them. So these are the different bundles. I have this one. I pay for this bundle. I pay for the real-time data, $7. And that is everything that I need to do everything that I need to do. And it's just a recurring charge, $7, and worth every penny, in my opinion. But what's cool is if there's other stuff you guys want to do, like if you want to do stocks, NASDAQ stocks, New York Stock Exchange, CME Group, that's what I'm doing. Tokyo Stock, I mean, there's all sorts of stuff. My futures markets, my CME Group, I can also do crypto. So I can run crypto charts on here as well. I've got gold, I've got crude, I've got my S&P workspaces, I've got my NASDAQ workspaces. All of that, it's $7. And then under paper trading, there's a lot of stuff in here. There you go. So there's your leverage. So what this is going to do, and what you're doing is you're setting in paper trading, Andy, what you're willing to do the leverage. And it's just preset. It's a simulator preset. Count history, what you did, where you did it, the orders that you placed, the positions that you're in, your trading journal telling you everything you did. This is great as well. I love a good trading journal. Strategy testers, editors to create your own indicators. Strategy testers, replay trading. At 11:11, sorry I missed it. 11:18. Is that the one you're talking about, Andy? Way to enter a trade by right click, then left click, left click. Okay, so guys, I can right click on a chart and hit trade. You don't even have to left click twice. You might have too many clicks, Andy. Right click, it says trade. I can sell to, I can buy to. So that sets a limit order, right? So sell to. I just went short. That's probably not the right one. Click X to get out of it or to pick a limit order. You could also do this. See how I'm hovering and you got that little plus? If price gets here, I'll sell to. There's your limit order. And this is fun, guys. It's just going through and playing with settings and figuring out how to do everything. You can cancel it by clicking the X. You can also click trade down here and say, I know I want to take a short, right? Let me set my profits at 75. Let me set my stop loss at 28. And where do I want it to be? I want to take that short right here. Whoops. I don't know what I just did there. Shows my stops and targets, and it's not letting me sell. Probably because I'm on the wrong side of the triggers, maybe. So if I go buy, I'm messing something up there. So if I hit buy, I can have predetermined. I wonder why it's not letting me. Oh, because it's a negative. Stop loss has to be below the price. There we go. So now I can click buy. And there's my limit. And it shows me where my stop is going to be. Well, I've done it a little bit, right? So if I get my limit order in, it puts me in. My stop is predetermined. My target is off in the distance. I can slide it up here and have all that. And then if I close out, let's say I want to sell. I click my sell button. Stop loss, take profits. If I click sell, suddenly I'm short. Stop is in place. Targets are in place. So I've got these preset. The 4 boxes. Where is it? Oh, I guess I have to reset it because I reset. But you can put those in. You can put those in and have them set as ATM strategies. So when I'm going to do a buy, and this is my profits and this is my stop loss, I can go ahead and click this, and I can save the order preset as buy. And then whenever I want to do it, all I have to do is come to my buy preset, where I just click buy, and it puts me in the market, and then it crushes me into 1-to-1s. So good stuff. Play with a lot of this. And remember, guys, 60 million users. Every question you could ever have about this platform can be answered online with a quick Google search. I put a link in the room earlier to the series that TradingView has to help you guys navigate. So that's TradingView, guys. Have fun with it. You can get a free demo. John Novak, if you get your demo and you want the indicators, send your TradingView ID to Jason. So you need to send Jason your ID, and he'll activate all the order, all the stuff for you, and make sure that you have access to it. And then here's your instructions: how to do everything, how to set it up, how to connect it, all that good stuff. And I am a crotchety old man that hates change, and I've had a pretty good time with this. I've had a lot of fun learning this. And I think for me it was about a 3 or 4 day period where I hated how different it was, and then after that I realized that it's just the same thing. It's momentum and path. Don't trade into areas. Don't fight strong triggers. All those things that take money out of your account on Ninja, all those things that put money into your account. They translate over. Are there any questions, guys? You got any questions I can answer? Anything on your mind? Meaning of life. Some of you are working through that. I'm convinced it's mint chocolate chip ice cream, but I don't have any proof to back it. Om. Termination, reversal, odds favorable, potential to break. Got to get below that third divergence. Namaste. I love me some mint chocolate chip, guys. Not gonna lie. Not gonna lie. Any questions? Good class today. Let me get